Okay, it gets a little more complicated than that. And let me explain that with a question. Suppose that you, in fact, have own a barbecue sandwich, right, like the one we've been talking about last week and this week. And at the current level of production and the number of sandwiches you're actually producing, you have an economic profits of equal to 0. Right? So your economic profits at that point is 0. Now, given that, let's say you have 4 choices. You should do what? You should continue to operate. Should you get out of the barbecue and sandwich business altogether? Should you expand your operation? Or should you reduce your operation? Right? So see if you can answer that question. Whether the answer you can answer correctly is going to tell you whether you understand the idea of profits that we're introducing here. Well, as it turns out, a lot of people at the beginning will assume that if your economic profits are 0, you should get out, or you should reduce your operation. But as it turns out, if your economic profits are 0, you're actually doing pretty well. And economic theory will tell you that you should continue to do whatever you're doing. You're doing it well, and you should continue to do it. Now, to understand that, you have to understand the difference between what we call economic profits and accounting profits. And in order to put it in the context of the example we've been using, which is at one of the barbecue sandwich store, let's hear from Mike about when he says how hard it was for him to decide to go into the business when he actually had a job, to decide to start his own business. So let's hear what he has to say about that, and then let's put that into context and the definition of accounting versus economic profits.
The story is that I was a bartender in Champaign at the Esquire Lounge. I bartended there for 15 years. There were 3 owners of the Esquire, and late one night I was talking to one of them, Pedro Heller, who ended up being my partner in this business. He's just telling him my idea, and it was just a conversation. We were just talking about things in different locations and things that we liked, and ideas of restaurants. And he liked what my idea was, and so we spent about a year looking for a place to open up, and he kind of taught me a few things along the way. He was just sort of introducing me the idea and the process of how we do things. We found this place. I happened to know the guy that owned the place, and I knew that he was looking to get out. I had heard it on the street, and I'd kind of heard it from him and talked to him. So when we bought the building, and then I quit my job at the Esquire once we bought the building. And actually, I quit my job when my twin sons were born, which was about a month before we bought the building. So I was unemployed and opening up this business. I had no income at all until this business opened, and for a while after, to be honest. Most expensive thing about it was just my living day to day. That was tough, but my wife works and we got through it, but she wasn't working that much because of the twin sons. Right now, yes, it seems like it was a no-brainer. It seems like it was the thing to do. It wasn't that obvious in the first few months, but yeah, it quickly caught on, and things, you could see the light at the end of the tunnel. But the day-to-day things in the beginning, it was a little tough.
So what did Mike say? It was really, really hard for him to start that business. He had to make a lot of sacrifices, and perhaps the biggest sacrifice that he made was that in order to put any time for his business, he had to quit his job. So for Mike, if his barbecue sandwich business was going to be any success, it had to at least give him as much money at some point. It had to give him as much money as he was making when he was bartending. So what economic profits do is to take that into consideration at the time of considering whether that person should make any business decision. Let me give you some numbers to put that into some kind of a hypothetical context. Say that the salary that Mike could make bartending was actually $100 per day. All right? And say that for sense simplicity, let's say the revenue that he gets from the sandwiches or whatever he's doing in his new business is about $200 per day. And say that the operating cost per day, right? And I don't know, this is probably more. These numbers are hypothetical, but the magnitude of the numbers is not critical. It's about $100 per day. The question is, what are Mike's profits? What are Mike's profits here? Well, it depends on who's calculating this. If an accountant was calculating this, the accounting profits that an accountant will calculate will be equal to the revenue that Mike's made, the $200, minus the operating costs, which are 100, and you will have a profit of 100. But this doesn't include opportunity cost, because we know that the opportunity cost, as we learned from Mike, of actually him having his own business, is the salary that he's not drawing from bartending. And that salary, that opportunity cost, is equal to $100 per day. So an economist will take into consideration those costs. So when an economist calculates profits, he actually not only considers the accounting costs, which are these $200 here, the operating costs, but also the opportunity costs. So economic profits, which are the profits we will talk about this week and ever in this class, are going to be the $200 in revenue he makes minus the operating costs minus the opportunity costs. And that is equal to 0 in the case of Mike. So you see that in that economic profits of 0, it's already taking into consideration the money he's making, right? Because if he makes 0 economic profits, that means that he's paying himself a salary that is as high as he will pay himself, or he will get paid if he were working somewhere else. So when we talk about economic profits, we include the opportunity costs. And that's very, very important, because that will mean, and later on we'll see, that economic profit of 0, meaning that you are paying yourself a salary that is as high as you will be making if you're doing anything else instead of what you're doing. Okay? So remember that every time we say profits, what we mean is economic profits that includes opportunity costs. And later on when we draw our final equations, it's going to be very, very important that you understand that distinction.
Produced by OCE Atlas Digital Media at the University of Illinois, Urbana-Champaign.